Oh, hi all. I hope we're all well. I hope we're living our life according to the life we want to live. We're being kind to ourselves, being kind to our family and friends, being kind to our putty cats, our animals, looking after them properly, and being kind just to anyone and strangers, just to make this world a better place. Thank you. Oh, hello all. I want to bring to your attention just some deposit rates are out there for cryptocurrency at the moment, and you could put that into an investment type strategy. It's also equivalent to repos and stock lending, so we'll go through that. It's not without its risk though, so we'll actually go through that and it'll make sense to you. So we've got Celsius deposit rates out there, and if you transfer your cryptocurrencies to Celsius and then to the custodian, you effectively get, say on Dash, 7.5% interest, Bitcoin Gold 7%, XRP 3.25%, and so on. So the question is, obviously, who is Celsius? But before we do that, this is, I'll just go through what stock lending is and what repurchase agreements are, term repurchase agreements, because this is very similar to stock lending on the equity market and repurchase agreements on the bond market. So effectively, stock lending in the equity market is basically you as a fund manager would lend stock out to a custodian or to another fund manager in the equity market. You'd lend that stock out because they may have a short sell or they don't have the stock, and you would receive a deposit from them equivalent to the stock plus an interest rate. So if, say, the equity is short in the market and people can't get it and it's going up, you'd receive quite a high interest rate for that stock that you're lending out short term. Now that could be up to 30 days on a stock lending scenario. So I've lent the stock out of my portfolio, I still own the stock, and I receive cash on that stock and a deposit rate for that stock. So in the repurchase market, or the bond market, they call them repurchase agreements. And I might be, as a portfolio manager, bond portfolio manager, sitting on a very expensive bond that people are actually chasing, like you know, say it's CBA bond, for example, and no one's got it, and they're looking for it. And on the repurchase agreement market, the borrower of that stock is prepared to pay me a high interest rate. For that bond, the borrower of that bond is prepared to pay me a high interest rate for that bond, to borrow that bond for, say, a term up to 30 days, and will pay me a fairly high interest rate. So I lend out the bond and I get that cash equivalent plus an interest rate. So I hope that makes sense. Now that's in the fiat financial markets, and so in the equity market it's known as stock lending, and in the bond market it's known as repurchase agreements, term repurchase agreements. Okay, so if we look at the cryptocurrency market, what Celsius is trying to do is no different to a stock lending agreement or a repurchase agreement, where effectively I hold, say, Dash, or I hold XRP or whatever it might be. I put it on deposit with Celsius. I lose control of my private key and I lose control of my cryptocurrency, and I receive that cash in equivalent at an interest rate of whatever it might be, 7.5%. Down, you know, whatever the cryptocurrency is for a term. And I may decide that term, I don't know what the lockup period is for these deposit rates. I might decide the term is, you know, say 30 days, for example. So just going forward, so the question is, who is Celsius Network? And again, you'd need to be familiar and need to know who Celsius Network is. And according to CryptoSlate, Celsius Network is basically a peer-to-peer decentralized lending and borrowing platform, and it's the backbone of Celsius Network. So effectively, it's on the Ethereum blockchain, ERC20, has a total supply of 700 million Celsius. It was announced February 2018, and it's basically New York, USA based. So if we just go forward and just stay with me on this, because it'll all make sense. So we've got a little bit of information on Celsius themselves, which we should look at Celsius and who they are. Also, we should be aware, you know, that Celsius would have issued their coin at 30 cents US, and currently it's trading at 0.06. So clearly whoever bought Celsius ICO is losing money at the moment. Just to give us a bit of background, obviously, on the company, because we need to know that if we're providing our cryptocurrency assets to Celsius to get a deposit on those cryptocurrency assets. And you'd need to do, obviously, a proper investment review of Celsius. And again, you look at the team, find out who they are they on LinkedIn, what are their credentials, because according to this, there's no credentials at the moment. So you need to look at that as well and get a bit of background on Celsius. So one thing that you do when you're actually lending out your cryptocurrency and receiving cash, you're effectively giving up the control of your own assets, okay? And that's really important to receive interest rate on them, and I'm assuming they would give you cash equivalent. You're actually giving up your own custody, so you're taking it from your Ledger NanoS and sending it to Celsius, who obviously then send it to BitGo, who's their custodian. Now, what I want to make clear is Celsius at the moment is not insured, and they don't have insurance under the banking code or FDIC insured. And the deposits go to BitGo, the custodian. So effectively, Celsius and BitGo will see your private keys, okay? Now, BitGo don't have any insurance either. Essentially, you give up, your private keys, and BitGo and Celsius, as I said, will have those private keys. Now, according to their paper, lender's protection in the white paper is only, it's 1996000. So what happens if they do more of these stock lending or repo agreements? Does that mean that your particular cryptocurrency that you've lent them out is protected? And that's question one itself. But in saying that, BitGo is an institutional grade custodian, and it looks like they've received the first SEC regulatory license. So that mitigates some of our risk, and which means they can offer regulated and protected custody of crypto assets. So that does mitigate some of our risks. But essentially at the moment, they don't offer insurance to their clients. So if something happened to BitGo, there was a malicious attack, or someone got in and stole their cryptocurrencies, my cryptocurrency, I'm not insured for that. Or if something else happens, I'm not actually insured if my cryptocurrencies get stolen from BitGo, who's the custodian who ultimately holds my cryptocurrency, because I don't have it in my Ledger NanoS anymore. Okay, so another thing is you'd have to, consider, what's the financial background of Celsius, and also look at the venture capitalists who have backed BitGo, the custodian. Now, good thing about this is BitGo, the custodian, has got venture capitalists in there, which are professional investors, and they've also got Goldman Sachs in there that made an investment. So, and also they've got a license, which is a good story in itself, because that gives credibility to BitGo as such. BitGo is a trust, and it is subject to meeting capital requirements and examinations by the Division of Banking and annual reporting requirements, which is a good story. So that does give BitGo a bit more credibility, obviously, than Celsius, the network. So there's an article on Goldman Sachs, who's made an investment in BitGo. So that does give you some solace if you're going to be transferring your own assets, cryptocurrency assets, into Celsius, into the Celsius network, to receive these deposit rates, which will then go to their custodian. Okay, so just to make that clear, but you do lose control of your cryptocurrencies. That's the most paramount thing you need to be aware of. Now, there's obviously other organizations out there that will show you interest on your cryptocurrency assets as well. And the next one is NEXO. Now, NEXO basically calls themselves, and according to CryptoSlate, they're the first, they say they're the first organization that will give you crypto overdraft. So if you put your crypto with them, you can borrow money against those cryptos. And if you put NEXO with them, you can borrow money at 4%. And if you put anything else with them, you can borrow money at 8%. But also on the other side of the ledger, these guys will also offer you deposit rates, okay? So, and those deposit rates are anything from 6.5%, where's the slide there, 6.5%, depending on what the cryptocurrency is. So, NEXO, again, did an ICO at 10 cents. It was fairly well received. All their founding team have LinkedIn profiles, which is a great story. Just to get a bit of background, their coin is traveling at 0.073, not too bad given the market for cryptocurrencies has sold off quite dramatically. And if you look at their deposit rates on these particular cryptocurrencies are 6.5%. Now, with NEXO, again, different to Celsius, they do offer a crypto custodian insurance policy of up to 100 mil. But even on their website, they've said we've written 300 mil in loans in the last 7 months. So, you know, if they've only got insurance of 100 mil, that's going to be a shortfall for sure. They basically say the insurance policy covers losses up to 100 mil and provided by BitGo's arrangement with Lloyd's. So ultimately, you'd have exposure to BitGo as well as Lloyd's, the insurance company in the UK. And, you know, it would be ideal to know the details of that insurance policy, because not all insurers will actually pay out on an insurance policy. So the bottom line is you can transfer your own assets, lose control of those assets to earn 6.5%, but only be covered for the whole organisation if they're holding, you know, hundreds of millions worth of crypto of 100 mil. Okay, so you need to be aware of that. And the question is how safe. The ultimate insurer is Lloyd's. Now, I know Lloyd's in the past have had a few issues of late, and again, you'd need to know that they were, you know, bona fide and solid. Yes, Lloyd's insurers have been around for nearly hundreds of years, but again, you'd really need to look into any issues with Lloyd's. And I do remember reading something about them just recently. But anyway, you get the general point. So if I go to BITRUE, which are also offering deposit rates on cryptocurrency, so if I had XRP, Hot, Tron, USDT, and the like, I can earn on my cryptocurrency 7.3% if I would like to transfer the control of my cryptocurrency to BITRUE. Now the question is, who are BITRUE? And when you look at BITRUE, you find out that they're actually an exchange, and it's a Taiwanese exchange. And essentially, I don't know how long they've been around for, but I had a quick look at them, and the volume they do on coin markets cap is very low compared to other exchanges out there. So if you look at the volume they do, here, have a look at this, they do very low volume. If you look at their ranking on coin market cap, they're ranked 60 in terms of the exchanges, and that would make me very concerned as a reasonably risk-averse investor, because it's a very, very small exchange. It's in Taiwan. It doesn't look like it's licensed or regulated or anything else. It barely does any volume. And so therefore it's paying 7.3% as a deposit for your cryptocurrency assets, because it's trying to get, you know, more assets, to possibly use to trade with. And because it's an exchange, how would you know whether they were trading your cryptocurrency assets or not, or even lending them out on repo or whatever it might be? So there are a couple of alarm bells for me, particularly with BITRUE, even though they're offering a deposit rate of 7.3%. Now we go to the back, 7.3% compared to, say, XRP at 3.25% with Celsius, and BITRUE is offering 7.3%. And if we look at Nexus, for example, I think it was a lot lower. Nexus was lower as well. So you do have to ring the alarm bells there in that sense, that they're offering a higher deposit rate. Obviously, clearly they need your assets more than anyone else does. So for me, I wouldn't look at investing. I wouldn't look at transferring my assets to BITRUE, but that's my own personal preference. This is not investment advice by any means, but we're just having a talk about, you know, some of the deposit rates out there. So please, this is just general education, and it's not personal investment advice at all. It's education only. But I'm just telling you, you know, whether I would like it or whether I wouldn't from my own perspective. So if we go to the next slide, and so you've got those 7.3%, as I said, and they are an exchange, which means there is pretty much a conflict of interest there in my mind, because they could trade those, and basically you wouldn't know whether they were trading your cryptocurrencies or not. Okay, also being a very small exchange, you know, they could run the risk of running out of money and going bankrupt, or there could be a malicious attack or anything. So if we go through the risks of BITRUE, very small exchange, country risk of Taiwan, we don't know whether they're regulated, insured or whatever. They do tiny volume. They're ranked 60 on coin market cap, which basically is very, very low volume indeed. You know, the custody is an issue because the exchange holds the custody, and I wouldn't be very comfortable with that for my assets. As I said, they could buy or sell your assets at any time, too risky for me, malicious assets. And again, you don't know their financials or whatever it might be. So, you know, that's a problem. But anyway, where we come to the investment type strategy, and again, this is something, you know, people, depending on the risk tolerance, you know, might like to take on a lot of risk, or they may not. And again, it is really, you know, a risky type thing. But, you know, there's an interest arbitrage here, but clearly a mortgage rate of interest is different to a deposit rate on a cryptocurrency, because the two products carry different risks, clearly. Cryptocurrencies are the most riskiest asset class you can ever find. And, you know, if you buy cryptocurrency, you can go up or down, you know, by 100% down, obviously, or zero, or down by 80% and so forth. But say, for example, you decide, because you're a risk, you know, you're a high risk investor, that you might borrow some money off your mortgage rate to buy a cryptocurrency and then deposit it with one of these operations that will show you a deposit rate. Now, you can use this as a bona fide investment strategy, providing you're happy to take that risk on, and it can be relatively high risk, to build wealth, or to build assets, and hopefully to build asset wealth. But it doesn't always work out that way, because, as I said, there are a lot of risks in doing this strategy. So say you're a US investor and you effectively want to borrow off your housing loan, and I'm looking at this rate here, say 4.57. For example, you can borrow that off your housing rate at 4.57. They're Australian rates, don't worry about those, and more different rates. You know, you might decide, right, there's an arbitrage here, but again, two different markets, very much so. The mortgage security market, mortgage borrowing rates are different to the deposit rates on cryptocurrency. But, you know, some people with high risk tolerance, you know, are happy to do this. Okay, I'm not, but some people aren't. I just want to bring it to your attention just for your own knowledge. So say I'm a US investor and I have access to my mortgage account, and I want to buy cryptocurrency, and I want to place it with BITRUE to earn my deposit of 7.3. So say I have a mortgage and I borrow $50,000 off my mortgage at 4.57. My interest rate on that is 2.285 per annum US dollars. I decide I want to buy XRP, use the 50,000 I borrowed off my mortgage to buy XRP. I buy 167,000 odd at 30 cents, and I place that XRP with BITRUE at 7.3%. Between that and that, I actually receive an interest of 3,650, and my net interest is 13,650, earning a 60% return on my initial outlay of 2,285. Okay. Now, the risks of this, obviously, this is full of risks. Okay. My risk on XRP, XRP can clearly go down from 30 cents, and I'd have a capital loss. On the other side, alternatively, it could go up. XRP does seem to have low volatility compared to other cryptocurrencies. But again, you know, XRP could go down from my purchasing of XRP at 30 cents. The risks on the exchange side, or the risks on BITRUE, are, yes, it's a Taiwanese exchange, and there is country risk there. It's a very small exchange. You know, it could be underfunded. It doesn't do any volume. It could be malicious attacks. I could lose my XRP. I've lost control of my XRP because they have my private key. It sits within their exchange. They're not licensed. I've lost control of my private key. I don't have it in my own custody, and they could lend out my XRP again. So it's a fairly high risk strategy. And again, it depends on your tolerance, your risk tolerance for risk. The question is, if you have a low risk tolerance for risk, you wouldn't actually do this strategy. Absolutely not. You know, the thing is, the risk of BITRUE, again, very small exchange, and there could be a higher risk that it's totally undercapitalized and it's going broke, and we don't know that. And obviously there's the risk of XRP going down. Okay, but if you're a high risk tolerant person, you might see a way, You might believe that, it mitigates the risk because you think that XRP is going to go up, and you think the exchange is going to be okay, and it's going to be stable, and it's not going to have a malicious attack, or it's not undercapitalized, and it's not going to roll over. So you might take on that risk and just say the risk is worth it for you to try and build your portfolio of crypto assets using your housing loan to do that. Now, again, there are other risks. What if you lose your job, you can't pay your loan, all those sort of things. There's a lot of risks in this strategy. And for someone like myself, I wouldn't do it myself, but that's my own personal risk tolerance. Someone else who's young or whatever might decide that they want to do that. Alternatively, you might just say, right, I'm not going to borrow the money. I've actually got XRP, and I'm just going to earn 7.3% return. And that's what I'm going to receive, the 3650. But again, you've got all the other risks of this exchange being too small in Taiwan, not insured, not controlled, not regulated. You lose your private key. They have control of your asset. It's not in a proper custody. And again, they could lend you out your XRP and you could lose it forever. Okay, you see what I'm saying here? So we went to strategy 2, and obviously I'm still a US investor and I'm arbitraging with interest rates, but I go with Celsius instead. Okay, so I borrow my mortgage at 4.57. Say I buy Dash, for example. So, and I place my Dash with Celsius at 7.5%. I buy 518 Dash off 96.36, where the price is at the moment. I receive 14.65 net income for the year, and it's a 64% return over 2285. Okay. Again, the risk on Dash is it could go down, it could be delisted, or it could go up because privacy stocks have been delisted off exchanges. And also, the sentiment for Dash hasn't been so positive over the last year. So, it may not be traded as much and people go off it, all those sort of things. The risk of Celsius, as I've gone through the previous risks, we don't know their financials, fairly small, malicious attacks could happen, no controls, you lose your private key. The private key goes to Celsius / BitGo / Lloyd's, and essentially you don't have control over the custody of your assets. But again, is this a risk? Given your risk profile, are you prepared to take? The risk is obviously Celsius, BitGo / Lloyd's, the ultimate insurer. Dash could go down, it could be delisted because it's a privacy stock, and again, there could be malicious attacks, all sorts of things, and it does depend on your risk tolerance, to whether you have a high risk tolerance or a low risk tolerance. Okay, you might decide, right, I'm not going to borrow money off my mortgage because I might lose my job, so therefore I will only send the cryptocurrencies that I paid in full. Rather than doing a stock lending or a repo, rather than borrowing money, like negative gearing, like in the Australian housing market, where you borrow money to buy an investment, a speculative property, and you get a return on that, rather than your own house, your own domicile house, you might just decide, right, to transfer the assets and cop 7.5% from Celsius, which reduces your risk to some degree, but you still have the risk of being exposed to Celsius, BitGo and Lloyd's. And again, you need to do your due diligence in terms of whether you want to be exposed to those guys and whether you're happy to have your private keys with those entities, as well as losing control of your cryptocurrency assets. So overall, it's an interesting investment strategy. I'm not sure whether I would borrow against my housing loan to do this investment strategy and even have it with Celsius. I may just decide for my risk tolerance, that I might just deposit a little bit with Celsius to get that return. But again, I'd have to really think about it and look at the entity and do my due diligence. But overall, the risks of these type of strategies, whether it's stock lending or repurchase agreements, you give up your private keys to the entities that you're actually dealing with. You lose control of your cryptocurrency assets, okay? Depending which entity you're actually doing it with. If you're doing it with NEXO, they're only insured for 100 mil through BitGo / Lloyd's. And if they write more business, does that mean yours is insured or not? I mean, the question is, how do you know yours would not be insured if something happens to Nexus or there's a malicious attack or whatever it might be? Okay. Also, generally the custodians in the bond market and the equity market have a credit rating by Moody's and Standard & Poor's. They're often listed, they're often regulated, and they're often big, and they're often very well known, and they've been around for over hundreds of years, i.e., for example, like Perpetual and Fidelity, and you're able to see their balance sheet, their financials, and everything else. So, you know, again, when you compare the custodians in the cryptocurrency market, the custodians are really small, not well known. You don't get to see their financials. They don't have a credit rating or anything like that. So there's risk in that in itself. Again, you may not have enough insurance that covers your own cryptocurrency that you're transferring to these entities. They could be malicious attacks. They could be too small. They could fall over. Again, for your risk tolerance, you might be, you know, happy with Celsius. Again, this is not advice because Goldman Sachs have invested in them, that sort of thing. But again, there's so many different risks to be earning, you know, 7.3% interest or whatever it might be. As I said, BitGo does have a trust license, and it does have to meet capital requirements. But again, if you do borrow money against crypto, you could find the cryptocurrency goes down below your borrowed amount, and then you're really in trouble. A bit like margin lending, where you borrowed money on the stock market and the stock's gone below your debt level, which is not great. And also you don't know whether they're lending out your cryptocurrency to other parties or entities. And again, if you bought, say, a privacy coin, it could be delisted. And depending on the custodian, depending on who they're insured, will that insurance be paid back? And then look, there are a lot of other different risks, but this is just food for thought, guys. Food for thought. It's not investment bias advice. It depends on your risk tolerance. And if you have a low level of risk tolerance, this sort of structure is out the window. Thanks, guys, for listening. Cheers. I hope this is of interest.